Money, 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 money. Oh, we're talking money today, everybody. All the things you need to know, all the simple numbers that help you with your real estate business. I could tickle your ears and make some crap up, but really, we're bringing in the expert of all experts. Andy Mulholland is joining us to talk simple numbers today. My name is Erik Hatch from Hatch Realty and Hatch Coaching, and we try to bring you new webinars every couple of weeks. Whatever topics we think are going to be relevant for you and the listening audience, we're throwing those at you. And my man, Andy, is joining us. I got to tell you, Andy is, for me, a legend in real estate. He's been and still is a friend. He's been a coaching client. He's been a coach. Now he's retired, living in his RV, driving around the country and enjoying life. Retired at the age of 34. Andy, you have a story to tell. How did all this come to be? Let's take you back to limo days and everything else. Walk us through all this because you have an awesome background.
Well, thanks. Yeah, I'm glad you remember that. So 2009, my wife and I had just finished going through Dave Ramsey's Financial Peace University. I was not a financial person, but when we were early married, I heard him on the radio and saw that people were screaming that they were debt free. And that was a new concept to me. I thought that was impossible in today's world. And so we went down that road. 2009 came, we had 6 months of living expenses as a newly married couple in our bank account. And it was time to make a leap into something. And that's when I joined or got into real estate. And so was licensed in early 2010, went full-time right off the bat. And
you were a limo driver before that, right?
I was because Dave Ramsey suggested that you get a second job and deliver pizzas. And so I worked for my father, traveling as a salesperson. He worked with car dealerships selling advertising, and I did that. And then evenings, weekends, a lot of days as well, was driving doctors from the Mayo Clinic back and forth to the airport about an hour each way, all night, all day. I even worked for a company called Life Source, where we would deliver organs, human organs, in coolers. I would take a team of doctors to a hospital. In fact, I went to Fargo once, drove into Fargo to a hospital there, harvested organs and brought them back to the Mayo Clinic to be delivered to a transplant patient on the waiting list. So, and it was kind of funny because
I just want to make sure, Andy, people understand that you were delivering legal harvested organs, not like
not
black market kidneys that you were buying or anything. This was just delivering a great service to hospitals.
Yeah, right. And it was kind of funny because my wife was a nurse at Mayo at that time. She was in the heart and lung transplant unit, the ICU. And so I would know before she would. I'd say the night before, I'd go out for a midnight run and I'd have to take these doctors. And I would say, hey, honey, by the way, you got some lungs coming tomorrow. So it was pretty cool.
So you said 2010, 2011, you went into real estate full time.
Yeah, right. I did, and had pretty good luck right away. Was rookie of the year for the association. Made way more money than I ever thought I would make in my entire life in a year. And it just kind of went gangbusters from there. Like a lot of people, though, I quickly realized that this thing was going to tear my life apart if I let it.
Yeah.
Right. It was going to suck me into it because of the temptation of the good money that it could provide. But man, and the temptation to try to sell more than anybody else. I played that game as well. And tried to, really chase being a top agent in the market, but quickly wore myself out and realized it was time to build a team. So
you said that in that first year, you were rookie of the year, you made more than you ever thought. What did you make your first year? What was your gross? What was your net? Do you remember that, Andy?
Yeah, I mean, I hardly spent any money. It was all just grinding. I had a notebook was my CRM because I didn't even know what a CRM was then. So I had a loose leaf notebook with everybody's name, phone numbers, and email addresses in them, and I was just calling them every day for an entire year and just did open houses as much as I could, all the stuff, that you got to do. But I made $135,000. And I went from the year before making $30,000, working full time, a couple jobs. So it was a big deal.
You were 26, 27 years old at the time?
Yeah, it must have been right in there. Yeah.
Okay. That's a lot of money for anyone. And in Rochester, Minnesota, that's a lot of bank as well. But you said, and you saw, I got to scale, I got to grow this so that you aren't tied to every transaction and you can get some of your life back. Yeah.
Yeah, totally. Pretty soon I realized the money was great, but man, I can't do this for 20 years. We had one of our four children was born at that time, and I saw pretty quickly that this was going to be a tough way to raise a family and still be in this business. But man, the money is the potential revenue was there. How do I do this in a way where I can balance it? And it took me a while to figure that out. Yeah.
So you started a team, y'all were selling and selling fairly well, but you came to a pretty painful realization, Andy. What was that?
Um, you remind me, you probably know what my painful realization is at
Well,
that
the fact that you were
sounds like you're
funding your
alluding to.
team. I,
Yeah,
like
right. I mean, the
you,
painful
you
realization was just that there was no way to scale this with me being involved in each transaction. The problem is, at that point, it was like, well, how do I do that?
Mhm,
And understood over time and learning from a lot of other people that it was people and systems and having the right financial model.
mhm,
Uh, it took me some time. I think that's what you were alluding to before, as I quickly realized that you can make money in this, you can build a team. But if the economic model is not right, if you don't have one, which was my case, I just didn't have a model I was following. I was just trying to build a team. That quickly you can realize that it actually costs you money to have a team. You lose money on your team. Now you're working harder, making less money. And I was in that trap, I was there. And it was a sobering place to wake up to be, to realize, holy cow, I worked harder this year because not only did I do all those same deals, but now I am leading a team. I have huge overhead. I'm trying to understand lead conversion. I'm trying to do this. I'm trying to do that, and help everybody else be successful. And I was making less money now, and so this was a problem for sure.
mhm. Andy, I have the privilege of coaching a lot of people, and I talk to a lot of folks who are in similar situations as yours. And I think it's defined as the messy middle. You
Right.
were once really successful as an agent, and you think the next step is I'm going to scale my business. I'm going to hire other people. I'm going to get success through them. I'm going to sit back, count my millions, and they're all going to make great money, and I'm going to make great money, and it's going to be this perfect solution. And rare, if ever, does that actually work. It takes a lot of savvy, a lot of intentionality, and a lot of grinding to actually make this work. And so I know you and I, as our friendship has developed and blossomed over the years, you came to a point 5 years ago where you're like, yeah, I just don't want to do this anymore. What happened then?
Well, I think it was because I had built something that I could walk away from. And that's was something that I came to the realization of, is why did I get into this business in the first place? Originally it was to provide for my family. And yet it was taking me further and further away from that. And I had achieved what I needed to achieve financially. I didn't have to do it anymore. And there's still days where I'm like, man, I miss that. I don't, I miss the team, I miss the culture, I miss all of those things. But at the same time, I spend 6 days a week, sun up to sundown, with my four kids and my wife. I teach my kids homeschool. I help my wife build our business Simple Numbers, right? Like, and I can do it all. And so in a sense, I am living my dream, which was to have that freedom. I was, for a long time, though, trapped in what I thought my dream needed to be, which turns out was everybody else's perception of their dream, which is to sell more houses, be number one, be on stage, do all these things, not realizing that that really wasn't why I started doing this, but I got sucked into it for sure. So when I realized I didn't have to do this anymore, I just stopped.
Well,
Yeah.
I'm really proud of you, Andy, for what you've done and the way in which you put your family first. I think a lot of us talk a big talk, but very few of us walk that walk, and you're doing so. So super, super impressed on that. I want to hand it over to you. I wanted to paint the picture for our people. Those of you watching live, please ask some questions. Put it in the chat box here. We want it to be interactive. If you're watching the replay of this on YouTube, by all means, ask some questions. I'll make sure that Andy or myself answers whatever inquiries you have. But Andy has developed what I think is the most easy to understand, simple, no-brainer. Let's master our profit and loss statements so that we can have freedom in our business and our numbers and not just be tied to and be a slave to. So Andy, I'm going to hand it over to you.
Yeah, for sure. Let me just share my screen. So I've got some slides that I think we can go through and that will help. So let me pull this up and then you can just make sure you can see what I've got here. Everybody can see that.
Very handsome. I see it. Yeah.
There we go. Let's just zip forward. Yeah, this is our business, simple numbers. And really it came from this idea that my wife and I thought, how did we get to this point? How did we get to the point where we could just walk away from this business, which I think if people were honest with themselves, is ultimately what they probably want to be able to do, or at least an element of walking away, specifically from transactions and personal production, I think is the big one. Whether they ever walk away completely or not is a different story, but they want to. And I think one of the biggest reasons, we all know you've got to have people and you've got to have systems. Every time I looked at my business and something wasn't working, it was a person or a system. And
either way, Andy, that's you, right?
totally,
If
yeah,
you hired the wrong person, that's you. If you don't have enough people, that's you. If these people are poorly led, that's you. It's always your fault.
right, yeah, 100%. And but the other piece of it that I think it took me a longer time to understand was that there also has to be a business model that I'm running, an economic model. When I first heard that term, I had no idea what it even meant. I didn't know if I had one. I didn't even look at my financials. And so we eventually developed, my wife and I, in my own real estate business, a method for understanding our financials, honestly, in a way that I could understand. She's great with numbers. It's just not my thing. I don't like to look at them. They overwhelmed me. They frustrated the heck out of me because I didn't understand them. I knew that there was importance to it, but I didn't understand how to interpret that and interpret the numbers. So we came up with a way to understand that. It came in the form of 5 simple numbers. And so when we decided to build a business to help others with the same problem, we named it Simple Numbers because that's essentially just what it is. We do bookkeeping for real estate teams and help them understand how to look at their numbers in a meaningful way, right? And so that's what I'll share with you today is how do we look at our numbers? This is my family. This is the coach that we drive around all over in the country. And but I think for a lot of us, there comes a point in our career where we're like, okay, I'm selling a bunch of real estate. I've got a team, but I still need help. I need help with the financial side. And it's usually because there's an economic model that is not in place. And by economic model, we mean where's the money going? How have we determined we're going to allocate the money that's coming into our business and still have a profit that allows us to stop having to sell or at least scale back or not have the business dependent on our sales? I think that's the big thing is how do we have an economic model that if we were to stop selling tomorrow, whether we ever did or not, we would be making money. That's the definition of a business, right? In my opinion, when it comes to a real estate team, is your business has to be able to make money if you stop selling tomorrow. Otherwise, you don't have a business. And in my case, I was the worst example of this. I was losing money without my production. I think the year I realized that I was going to lose $200,000 on my production, the amount of money I brought in from my sales on my team, that was a problem. And it's because I didn't have an economic model, to follow. That's really what it came down to. So
Andy, it was 7 years ago, almost to the day that I got out of production. And what I had done is I did the mistake that almost every realtor makes is they use their own personal production and they put it in full into the team's bank account. And you are left and lulled with the idea of what you actually think is profit. And it's not, it's a farce. It's not company profit. See, you may be making money as an agent, but are you making money as a business owner? And that's what you're really getting to, Andy, here is what are you making money as a business owner? Because you should be paying yourself the same split that you're paying every other agent on your team. That cash should be coming out of the company kitty and going into your own personal bank account so that you have clarity on what your numbers actually are. Because when I got out of production 7 years ago, I all of a sudden profited $150,000 less the next year, even though we sold 100 houses more. I lost 150 grand as we sold 150 more houses because I didn't ever do these numbers the right way. And I was left with this, oh crap kind of moment, Andy. And we need to make sure that people avoid that in the very, very beginning.
yeah, I agree. It can't be more important. I think it's all about having a plan. I think that's when I think about and have worked with people around their financials for their real estate team, it all comes down to having a plan to follow. And I think there's a lot of different ways people do it, and that's okay. We've got some thoughts on how to do it and not do it, as far as how you create your chart of accounts and how you run the numbers in your business. And I'll go through those today. But it's all about having a plan, and that's really, I think, the big thing. So my goal for this is just to help you make sense of your P&L by understanding the 5 simple numbers. But before I can talk about the 5 simple numbers, I think it's important we understand how, I call them the 3 lenses in which we look at our profit and loss statement. Most people look at their profit and loss statement, or they do books, they do their bookkeeping because they know they have to do taxes at the end of the year, and their accountant needs books. That's the reason a lot of us do our books. And we got to understand, though, that that's looking at it through the eyes of the IRS is one way to look at our books. When we look at it through the eyes of the IRS, we got to make sure we're in compliance. We got to make sure we are following the law, so that if we get audited, we're not in trouble, right? We also want to be able to deduct as much as possible, so our tax liability is as low as possible. But all of that is how the IRS is going to view our profit and loss statement. And I think for a lot of people, a lot of business owners, whether you're in real estate or not, that's kind of where we stop with our books in a lot of cases. But we've got to realize there are a lot of benefits to, there's a lot our books can tell us about the health of our business. I've always told people, you have 2 report cards in your business when you are sitting in that CEO role, especially in a real estate team. Number 1, your calendar, and number 2, your profit and loss statement. Those tell the story of your business, in my opinion. And so we've got to look at the profit and loss statement in a few different ways. One is, yes, we have to look at it like the IRS will look at it, so that we don't do something wrong. Second, we have to look at it through the eyes of our accountant. Our accountant's going to kind of balance that for us. They're going to say, well, yeah, you can deduct this and you won't get in trouble. And no, we can't deduct that. And they're going to look at it from the eyes of an accountant, which for me never made, they just confused me more than they helped me in a lot of cases. But it's important we take their advice. It's important if they tell us to run things a certain way that we do that. That's the point. That's a reason we have an accountant. They're going to keep us out of trouble. But it's still not in my opinion, most important reason we should be doing our books and looking at our profit and loss statement. The biggest lens, or the most important lens, I think, or I should say the most value that our profit and loss statement can bring us, is if we look at it through the eyes of a CEO. What are our numbers telling us about the health of our business? I tell you, there are so many real estate teams that I've talked to and worked with over the years that on paper have an unbelievable business. They're on stage at every conference. They're on all the webinars. They're talking about all these cool things that they do. But I've seen their profit and loss statements, and it tells a whole different story. I've talked to them with tears coming down their face because they're exhausted, like I was, and making less money, and have built this thing. I remember feeling, to me, I felt, I don't even want the business I had in the early years when I was working hard to build a team and making less money than I did when I was on my own. I'm thinking, what have I done? What have I done? I was on stage at things and people were saying, wow, this great business, you're growing so fast. We're selling hundreds of homes a year. And I'm thinking, you don't even want what I have, because I didn't have an economic model and I wasn't looking at my numbers through the lens of a CEO. And it was telling me so much once I understood it. And that brings me to these 5 simple numbers, because once I understood these 5 simple numbers in my business, my P&L told me everything I needed to know. And that's coming from someone who is not a financial person. Okay. So let's dive into what these 5 simple numbers are. The first one is the one that I think in real estate we tend to focus on the most, and grade ourselves, and even honestly give ourselves self-worth around. I remember feeling like I was worthy of myself. I was worthy of being praised if my GCI continued to grow. I don't know what my net is. I don't know what my expenses are, but as long as I was increasing my revenue, I was winning. And it's such a wrong way to grade ourselves and give ourselves a report card on whether we're doing good or not, because it does not matter as much as the other numbers in our business. But it is
Andy,
the first
Andy,
number.
is it fair to say GCI, gross commission income, and total revenue? We're saying the same thing there, right?
Well, possibly. I mean, it's a few different numbers. And this is where I see people make mistakes around total revenue. Total revenue is the whole pie. It's everything your company has brought in. Now, I see a few mistakes people make, and I want to mention this because they will add in, like if they have personal rental properties and they run them through their business, they'll add that income. That's not your real estate team business income. So I would not encourage you to put that in as part of your total revenue. I would not encourage you to put in there if you are in a company where you get profit share or revenue share. That's a separate business, in my opinion, and it skews your numbers in as far as whether you're a healthy business or not. If you have a brokerage and a team and you put those numbers together as total revenue, you can have a brokerage that is hemorrhaging money. But because your team is so profitable and we put the total revenue together in our profit and loss statement under one umbrella, wow, it looks like we have this super great profitable business. All the while, our brokerage is hemorrhaging money. So I've seen that. Another mistake I've seen, specifically with Keller Williams agents and a few other brokerages, I think Compass I see this with, and some of the other ones, where the GCI comes in, right? You do a deal, let's say it's $10,000 and it's a transaction, and the commission is 10 grand that your team gets off your deal. And that's top line. But now your brokerage gets, let's say, $2,000 of that. And then your agent gets $2,000 of that. And then there's $6,000 that comes to the team. And what I see is the team leaders only considering that $6,000 as their total revenue, when in fact it was $10,000. They're not looking at the other $4,000 that they paid to their broker and agent as revenue. They're just saying, well, I never got that, so therefore it's not part of my revenue. That's not true. It is part of your revenue. That's your cost of sale, which we're going to talk about. But those are the big mistakes, I see people make when they don't around total revenue. This really truly should be the total amount of money your company brought in before anybody touched any of it. Your broker, agents, any bills, any referral fees, just total revenue that you brought in into your business. Specifically your real estate team, not those other things we talked about, like your personal rentals, any profit or share or otherwise. So
those all should have their own separate profit and loss statements. Yes.
I mean, they really should. Or for some of the clients that we work with, we just separate those out in the profit and loss statement so that they can extract the true numbers of their business, right? Going back to how you look at your profit and loss, if you're including all those numbers in, okay, that's fine. But when we do an analysis of your business to understand the health, like a doctor understands an x-ray, they're looking at the health of whatever they're looking at. We need to pull those numbers out because they are skewing your total profit percentages and other percentages because they really aren't part of your real estate business, if that makes sense. And to me, that's the main value of doing monthly bookkeeping and quarterly reviews and all these things, is because I need to know, is my business on or off track? Is it healthy or is it not? And if it's not, I got to make some changes. So that's number one of the 5. What's your total revenue? And that's the pie. That's the whole pie, the circle. It's why it's a green circle here. Number 2 is the first time we have to now take some money out. And that's called your cost of sale. Cost of sale is pretty simple. I explain it to people like if you were in the restaurant business and you were selling plates at a table, right? I'm selling even pizza. Let's use pizza as an example. Well, your cost of sale will be the cost of the food, right? You might charge $10 for a pizza, but $2.50 went into the dough, the meat, and the cheese, and the sauce. And so it's your cost of sale. You got $10 for that pizza, but $2.50 is what it took just to get that pizza out the door. And so in real estate, it's typically things like, most commonly, your broker split. If you have a broker you got to pay, that's a cost of sale. Your agent split. It could be, for some people, again, there's different ways you can run this, but some of them consider their ISA pay. Sometimes I see people look at their ISA salary as a people expense, but the commission, if they pay them their ISA maybe $1,000 a month, or hopefully more than that, but $1,000 a month in base plus 5% split on the deal. The 5% is cost of sale. The base is a people expense. But cost of sale is things like showing assistance, anybody that's going to get paid a percentage of the deal. Now, it is not, in my opinion, the split and referral fees you're paying to companies like Zillow. If you're on a flex program with them or other Home Light or whoever you're paying a split of the deal to, that's not a cost of sale. That is a marketing expense. It just happens to be formatted in a percentage versus a fixed monthly cost. So I really try to teach people to look at their cost of sale as anybody on their team that gets paid a percentage of the deal. That's your cost of sale. Okay. That's number one. We got to take that out. So we're going to chunk that yellow piece out of the pie. We no longer have that. We have what's left. And that's simple number three.
Andy, hold tight real quick.
Yeah.
Cost of sale or cost of goods sold, COGS for short, same thing?
Same exact thing.
Yep.
Absolutely. It's very simply what it cost you to procure that sale, basically, you know. Next is what you have left. That's the gray area now. Which is here. If we paid out the yellow in cost of sale.
Andy, are you saying that referral fees, let's say Remax in New Hampshire sends me a referral, is that a cost of goods sold or is that an expense?
I look at that as a cost of goods sale because it is a referral to another agent. No different than if it would be an agent on my team. It's just an external agent and I had to pay them a percentage of that.
But I just not a Zillow or a Veterans United where they're taking like a 35% because that's a lead source. Yes.
Correct. There you go. And again, I never split hairs on what someone wants to do there. If they want to put that in cost of sale or whatever, that's fine. But then let's make sure our model, how much do we want our cost of sale to be considered healthy, changes depending on if we're adding that in or not, right? If that makes sense. We'll talk more about the model, but you know, there's no wrong way to do that necessarily. There's a way I prefer people do it and suggest they do it, but it can be done anyway. We just have to make sure we're accounting for that correctly when it comes time to compare to a model that we want to be running. If you say, hey, I want a 20% cost of sale, okay, that's fine. But then are we including those fees to Zillow or are we not? Because if we are 20%, you might need them higher, 30%, whatever, you know, so we have to change them based on how we're running those numbers. So what you have left is simple number three. That's your gross margin. It's very simple. Your total revenue minus your cost of sale equals gross margin. It's also referred to as gross profit. I personally, I'm all about keeping things simple and non-confusing. So I don't like to use the word profit when it comes to gross margin because it confuses people and they think, well, is that my profit or is that not my profit? So I just use gross margin, but it is the same, same as gross profit. But from this gray area here, we got to do two things with it yet. We're not just riding home to the bank with all of this gross profit in our pocket. We still got to pay our bills and then pay ourselves, right, as profit. And so that's simple number four is expenses right there. So now from what was left in gray, we now have the red area, which is our expenses, our operating expenses, okay? And I usually break those up into three categories. I do not think, especially if we're just getting started with getting a handle on our finances, we don't want to have more than three categories. And the three categories we usually teach people to do or do for them when we do their bookkeeping is people, marketing, and overhead. People would be any, in the way we set it up, usually non-owner salary, so any staff people to understand what it really costs to run your business. Now, if you are in a position, if you are the operations director, if you are the sales manager, if you're in position still where you'd be paying someone else to replace you, then you might want to consider your salary as a people expense, because if you went to replace yourself, you'd have to pay that. But again, it's less about how you do it, but that you know the model you're running against. If you're not including your personal owner salary as a people expense, then you should be spending less on your P&L. It shouldn't be 50% of your total revenue. It should be less.
Mhm.
If you're not including that, then it should be more. And so you kind of look at that in a few different ways. The second category is
Here's what I love about this, Andy, is you're not telling people what the percentages should be. You're just teaching them how to understand the percentages. And Robbie and I
totally
right now are writing a book called The Perfect Real Estate Agent Blueprint that is not only taking all these things you're talking about, but we're actually giving them exact models of what we think will lead them to the profit piece. Because in my world, I put my salary in my people expense.
right.
But and that leads to my profit number, because here's what Robbie and I will say is you will get paid as a business owner in three ways. One is you get your salary, your CEO salary, your sales manager salary, your COO salary, whatever seat that you're in, you get that salary.
Right.
That's kind of a stem off of profit first, the idea that you need to be paying yourself, but you're paying yourself for the job that you're doing. The second is the production that you do, right? If you're giving referrals or if you're in production yourself, you're now getting paid as a producer, just like any other agent on your team would. Again, if you're gone tomorrow, so is that cash. So you have to make sure that you're building that model that shows and supports that. And then the third, which is everything you're doing here, is your business owner profit.
Right. And I agree with everything you said 100%. But the reason I typically don't do that for people when we do their books until they're more advanced is because it confuses them. Right. Then they're like, well, how much money did I actually make? How profitable am I really? And I'll talk about net profit and owner pay as usually the fifth number here. And in fact, we can just go to that. So everybody's clear. Expenses, typically three categories: people, marketing, and overhead. And you should know, how much should I be spending total? In my business, I ran 30% expenses, right? So simple number four for me, every month I looked, am I running 30% or am I not? 30% of total revenue. So if number four is more than 30% of number one, I'm spending too much. And the way I ran it was 10% went towards people, 10% went towards marketing, and 10% went towards overhead. It made it really simple and easy. Now, if you're including your salary in people expenses, you're going to be spending more than 10% most likely. And that's totally fine. It's all your money. I don't care how you split it up, but just make sure that you're comparing apples to apples when you're looking at other people's businesses, right? You might come across somebody else and says, yeah, I got a 30% profit margin. Well, how much of that is your salary? How much of it is true profit? And so if you say, well, gosh, I'm only at a 10% profit margin, but 20% of your revenue is going towards your salary and you're including that in people expenses, you're at 30% net profit and owner pay too. So that's the point here, I think, with simple numbers is keep this as simple as you can in the beginning until you can understand them and get more advanced. But make sure you just know that, you're running against a model that you're happy with. And to me, that comes down to simple number five. What do you want your net profit and owner pay to be? What do you want it to be in a dollar amount? If somebody comes to me and says, Andy, I want to make $1 million a year and I want to be out of production, I say, awesome. So what percentage do you want that to be? I ran a 30 to 35% net profit margin and owner pay. So my net profit and my owner pay totaled 30% of my top line revenue. So for me to make $1 million a year as the owner, both in net profit and owner pay, I don't care how I split it up, then I needed to do $3 million in top line revenue as a company. I now knew exactly how big I needed to build my team. We needed to get to 3 million and I needed to be able to net 30 to 35% on that. And I'd make $1 million a year. And that's without me selling real estate. And so what's your number? Do you want to make $300,000? I'll usually ask people that. I'll say, well, what is the amount of money you would want to make to be able to exit production? If you were no longer selling, would you be happy with 300,000? Great. And what percentage can we hit? How much are you spending on expenses right now? And how much are you spending in cost of sale? They say, well, I'm at about a 10% net profit. We would just work the numbers backwards and they'd have to do 3 million in GC in top line revenue as well in order to net $300,000 at 10% net profit. So the point is, this is so simple if we just look at it from the lens of the 5 simple numbers. It's very simple. And the good news is there's only 2 places we can mess this up. That's what's cool about it. There's only 2 places, and you can see them in red there. Cost of sale and expenses on the left-hand side. If we pay too much out in cost of sale and we spend too much money, we're not going to have any net profit left over. It's that simple, right? And so there's really no more to it than that. The equation around the 5 simple numbers is, what's my total revenue minus my cost of sale? That's going to give me number 3, my gross margin. And then I subtract my expenses, and that gives me number 5, my net profit. And in the case of the way I ran mine, my owner pay combined with that. Again, if you put your owner pay up in your expenses, that's fine, but then you're going to have a lower net profit percentage because more money is going to be going towards expenses. But Eric, here's the way I looked at it. And honestly, it was all my money. I don't care if it's in expenses or net profit. It's all my money. It's my business. I'm getting a salary and profit. It's all my money at the end of the day, as far as that goes.
So two things here, Andy. One is, would you heed caution at some people in making sure that they have like a red light, yellow light, green light for their numbers? For me, that's been really good and beneficial, that I know my business's numbers every day, so that if I'm in a certain area of profitability, I know, like, Eric, you can't go and spend and you can't try anything new. You got to get really diligent on that. So what advice would you give to people in terms of creating boundaries around these numbers?
Yeah, totally. And that's one of the exercises that we put most of our clients through, is what we call the simple number analyzer right here. And this really isn't complicated. On the left-hand side, you've got your 5 simple numbers, right? So GCI, cost of sale, gross margin, expenses, and net profit. And in our case, owner pay. And in the red, where the red boxes are in the middle, you just have to decide what you want your percentages to be. These were mine. So every quarter we could look at this and say, okay, how much was my cost of sale? What percentage is that? I'm trying to hit no more than 35% of every dollar going out in cost of sale. Am I on or off track? Or in this case, over or under? If I'm over, I need to make some adjustments. Maybe that's the splits I have with my team, which can be a very difficult thing to change. Maybe it's, I need to start charging an admin fee and having 100% of it come to the team. Maybe we need to have a higher commission percentage. Whatever it is, how do we get our cost of sale down? Maybe I need to renegotiate with my broker or find a new broker. But yes, we need a red light, green light, and that's exactly what this tool is. If anybody wants to use this tool, they can, and we can provide it to them. But having percentages to check around on the 5 simple numbers should be the way that you look at your numbers monthly and quarterly and annually. So for example, every quarter I'd sit down and pull up my P&L, and I'd say, okay, what was my GCI? And number 2, what was my cost of sale on that GCI or total revenue? Am I above or below my target? Then I would say, great. So how much is my gross margin? Number 3, am I above or below? And then I'd say, perfect. How much were my expenses? Am I above or below? And then what's my net profit? Am I above or below? If ever there was one that was off, that was my job as the CEO, CFO, to dig into it and figure out why. Mostly, again, as I mentioned, there's only 2 places you can get this wrong. It's number 2 or number 4. For the most part, when we work with team leaders, it's number 4. They're just spending too much dang money. They're not running profit first, which, by the way, we run for a lot of our teams that we work for them, because that keeps them disciplined. But for me, it was 30%. If I'm not at 30%, something's wrong, and I'm going to dig into it. Am I over on people? Am I over on marketing? Or am I over on overhead? And now I can make a change. If I find that I'm over on marketing, guess what? I'm pulling back marketing expenses the next month and quarter to get back in line with 30%. So with all of this, what I hope people take away is, this can be as simple as looking at your 5 simple numbers every month, quarter, and year. You should, as you mentioned, compare to a goal. What is your goal? What is the model you want to run against? Does it allow you to make money without selling? And how are you compared to it, with your current numbers? Do you need to make changes? Do you need to get your cost of sale down, or do you need to get your expenses down? Because those are the only 2 places you can mess this up. So it should be as simple as that when it comes to looking at your 5 simple numbers. Now, can we make it more complicated? Absolutely. And as you grow in your aptitude to understand your financials, so will the the complexity possibly of these numbers. Although I'll tell you, we sold several hundred homes a year. I didn't sell a single one. Running a model every month, all I ever looked at were my 5 simple numbers. I hate complicated things, especially around numbers. And so I kept it that simple. But you can make it more complicated as well and look at a lot of different things. So,
Andy, I have a couple of clarifying questions here from some people who are watching live.
yeah.
Matt wants to know, are there things that are obvious that would go under marketing and or overhead?
Well,
What
yeah,
would
it's a
be
great,
some of those things that fall under those categories?
yeah, great question. So obviously, so the way I looked at this is, did any dollar I spent to generate an opportunity for my team is a marketing expense. So for me, I considered obviously any lead sources as marketing. I consider past client events as marketing. The whole reason I did them was to generate referrals. Our Mojo dialers, our Vulcan 7 to get expired invisibles, like all of those things that you could use to generate leads, generate opportunities, in my opinion, are marketing expenses. Then, of course, you've got people expenses, which in my opinion are any staff people, staff salaries on your team, maybe your salary. Any other expense is an overhead expense. So if it's not a people expense and it's not a marketing expense, it's an overhead expense. So office supplies, office rent. Where I see people get this wrong is that they run a ton of personal expenses through their profit and loss statement. So if you're doing that, any client we work with that does that, good for them. We encourage you to do that because it reduces your tax liability.
You're talking vehicles, phones,
yeah, travel, meals, anything you can write off, do it. But you should be looking at, there should, I don't want to overcomplicate this, but there are 2 different types of expenses. There are direct and indirect. Direct is like a direct expense that really truly was a business expense. Indirect is all that personal stuff you run through your business. When you do your books, you need to make sure that you separate direct from indirect so that when you go to look at your profit and loss statement, you can say, I spent $100,000 on personal expenses I ran through the business. I made $0 in profit. I'm failing. No, you're not. You made $100,000 in profit. You just chose to spend it on stuff and deduct it in your business, but it really was your money. You just spent it, right? And ran it through the business. So direct versus indirect is where, again, we can start to get things a little more complicated. But I think when it comes to expenses, it's important you are pulling out personal expenses because they are not overhead. They're not a business expense. If that makes sense.
Yeah. One final question here, and then I know you have some other things. We have about 10 minutes left, Andy, to give perspective.
Yeah.
How about taxes? Because withholding for taxes, is that a business expense or is that a debt to the profit after?
Debt to the profit after. Now, again, if you run it as a business expense, you can do that. If that's what your accountant is suggesting that you do, then you should do that. But then don't be upset when your profit isn't as high as your buddy's because he's running it in a different way and he's running it afterwards. So that's the whole point, is we got to compare apples to apples here.
Great. Thank you.
Yep.
I got you totally off track there.
No, it's good. I think that's really the most, I don't want to share too much as far as too many details either, because I think that's where it can get confusing as well. But again, it should be as simple as those 5 simple numbers: monthly, annual, monthly and quarterly and annually. Yep. What else?
You had talked about providing the tool that's on the screen right now. Where can people access that, Andy?
Yeah, so they can visit us at simple-numbers.com. They can message me personally on Facebook and I'll send it to them, or they can search for the Simple Numbers financial training. We have a free financial training that I did for anybody. It's free. It's a private group, so you have to be invited, but you can request access to that, and then I can allow you to be in there, and it's in there. I've had some people have trouble finding it. Some people have no trouble. Other people have trouble. So you could always email me as well, Andy at simple-numbers.com. And it's important you put the little dash right there where my finger is to get to the website, but simple-numbers.com. And I'd be happy to give you that stuff.
Andy, I gotta say this, man, you are a wealth of knowledge. You're somebody who knows a lot about this business. You and your wife, Ellen, who is more talented, smarter, nicer than you anyways, you're
right.
offering services to people and you don't need to push it, but I'll certainly push it. I have been recommending clients now for the last few months to go and actually have Andy and Ellen at simple-numbers.com start to run some other people's P&Ls. And y'all are inexpensive, cheaper than most accountants are going to charge, and you understand real estate with great intensity. So I don't know if you even have capacity for more people right now, but I keep sending them your way, and I hope they're as happy as my clients are, because my clients have been thrilled with the service you've provided so far.
Yeah, we appreciate it. And yes, we have capacity for more, and we're looking to continue to grow Simple Numbers because it's helping people. And I tell people when I meet with them and we run through their P&L. By the way, I'm happy to do a P&L analysis for anybody on this call. Email me, we can set up a Zoom. I'll help you go through your P&L and get some sense. Even if you have somebody else that does your books, totally fine. I'll help you walk through it and identify the 5 simple numbers in your P&L. And if you need bookkeeping, yes, we do bookkeeping. That's what we do. We just happen to do it in a way where we understand it, I think, more than any other bookkeeper, accountant, anybody can, because we've ran a business ourselves in the right way, as you mentioned. But happy to help with that any way that we can, because as I tell people when I meet with them, honestly, I'm not doing this for you. I'm not doing this for you, the team leader. I'm doing it for your marriage, your spouse, your kids. I see my kids when I see you, and I say, how can I help you build a business that allows you and everyone on your team to spend more time with their family, with the ones that they love, the ones that they doing the things they care about, and with those that they want to do them with. So it's funny, people think that profit sometimes is selfish, but to me, if you aren't tracking profit, if you aren't building a healthy business, that's what's selfish, because those that love you and you love aren't going to get as much time with you because you haven't set it up correctly. So hope that's helpful.
I love it. People asking for your email address. Again, Andy at simple-numbers.com. Also at Hatch Coaching, we have some virtual events you need to check out. We just finished up with a showing partner bootcamp, which was on fire. And we have a lead conversion bootcamp that starts in just a couple of weeks. So that's over at hatchcoaching.com/virtual-events. Oh, big stuff ahead. Andy Mulholland, God bless you. Appreciate you, man. Thanks for bringing great value. Folks, in the meantime, we're going to even send out a discount code for some stuff to you. So those of you watching live, we got something good coming at you. That's it, Andy. Thanks much,
Eric.
buddy.
Thanks, everybody. See you later.
Be well.